Hi everyone. Fiverr reported fiscal year 2023 first quarter earnings results. So in this video, I was going to review its latest financial figures, bring you the biggest important figures from those earnings, and then I'm also going to update my buy recommendation on Fiverr stock. Coming into these earnings results, I had Fiverr stock rated as a buy, so I'm going to review the results and then answer if my recommendation has changed from a buy. So let's begin. So revenue increased by 1.5% to 88 million, but its loss from operations improved to 7.15 million. That was much better than the 17.2 million in the same quarter the prior year. Fiverr did a really good job keeping costs under control. It decreased its spending on sales and marketing, and that allowed its loss from operations to improve by more than 10 million despite its revenue only going up by 1.5%. Now, the big story, of course, with Fiverr International stock is how is the business going to be impacted from the rise of artificial intelligence? Fiverr brings together buyers and sellers of services, and the worry is that most people that buy these services can just use artificial intelligence to get the services they need instead of having to hire somebody to do these services. My opinion has been that yes, some of the services that people needed to hire out for, they can now just use artificial intelligence to generate those services, but that's not going to be the majority of Fiverr's business. It's not going to be meaningfully impacted all that much. And the stock price has already incorporated in those risks from artificial intelligence hurting the business a little bit. So of course, Fiverr's management knows that their stock price has been impacted by the rise of AI. So they're addressing this here. I pulled this from their press release saying, "We haven't seen the development of AI displacing the need for human talent. On the contrary, we are seeing the increasing need for human skills to deploy and implement AI technologies." That's the key there, and that's what I found is that you still are going to need people to, even if you have these large language models, you need people to prompt them, right? Let's say you want it to write you a social media post. You need to put in those prompts and set up those things. And, if you're an entrepreneur and you're running a business, you're still going to want to have somebody do that for you, right? You're going to be willing to pay somebody to prompt the AI to create the content that you want the AI to create. So you're still going to have a need to hire services, but the services you're going to hire for are going to be different, but you're still going to need services. Moving on now, the company's active buyers increased by 0.3% to 4.3 million. That's really good news. And the average spending per buyer increased by 4% to $262. The take rate increased by 80 basis points to 30.4%. So what the take rate measures is what Fiverr takes for its services. So Fiverr is a platform that brings together people that are offering their services, such as creating thumbnails for YouTube, and what buyers are the people that go onto the platform to buy those services. And let's say you might pay $10 for somebody to create something for you, and Fiverr will take 30% of that $10, and then the person selling the services will keep 7 out of that $10. So that's what I really like about Fiverr's business model, is that it just brings together buyers and sellers of services and takes a fee for its platform for bringing people together. And I'm a fan of this type of business model. This is similar to Etsy and eBay, two other stocks that I really like and I have rated as a buy, where they just bring together buyers and sellers and they take a percentage for doing this, providing this service. So Fiverr is another one of those types of platform type business models that I am attracted to and I think can be lucrative once they reach a certain scale. Here's another good thing about Fiverr. In the second quarter, they're forecasting revenue growth of 5% at the midpoint, and they raised their full year guidance slightly to 6.5% growth at the midpoint. So if we look at this quarter, they grew revenue by 1.5%, but for the full year, they're expecting to grow revenue by 6.5%. That means the second, third, and fourth quarter, management expects revenue to accelerate considerably in order to reach that average growth rate of 6.5% for the year. So the first quarter is likely to be the bottom, the lowest rate of growth for Fiverr, and it's going to be increasing, accelerating revenue growth for here on out. And if they keep costs under control like they did in the first quarter, man, it's going to look good for profitability in the second, third, and fourth quarters. So I really like this quarter of performance from Fiverr stock, and I will reiterate my recommendation for Fiverr stock as a buy. So I had it as a buy going in. I like the quarter, and I'm keeping the stock as a buy coming out of the quarter. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.